Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day today. And in today's markets, guys, well, we've officially done it. We've lined up two very nice green days in a row. The SPY ending up 1.55 today, and the Qs up 2.27. That's off the back of a similar rally yesterday, which saw the indexes move up 2%. It's been a very long time since we've had two very decent green days in a row, so we'll take it. But as I've been saying recently, this market is supercharged with headlines, specifically tariff headlines, and today was no different. What started off as a very bullish morning overall, with the Qs seeing gains over 4%, 4.1, and the SPY seeing gains of over 3, almost 3.5%. Well, we kind of gave almost half of those back, and there's some reasons behind it, some news, some clarification from yesterday's headlines. We know that today started off in a very bullish manner because of the comments made last night. Number one was Trump saying that no, he has no plans to fire Jerome Powell. And number two was Trump saying that the tariffs on China in the end will be nowhere close to 145%, but that we're still looking proactively for a deal. A couple pieces of news came out today that kind of threw cold water on that rally overall, and we're going to get into that in just a few key moments. So in today's video, we're going to go over a few things together. Number one, recap the news of the day, because as with every day, there's some tariff news that we have to go over. So we'll take a look at that first. Number two, we're going to be covering a few earnings for you guys. And those are going to be earnings from, that's not the right page, we're going to be covering Chipotle, ServiceNow, and Texas Instruments. I know there's a ton of earnings today, guys. I'm just going to go over the ones that I feel that are the most, the best ones essentially for the channel right now. Thereafter, we're going to take a look at our major technical analysis rundown after these nice bounces. Where do we stand? Are there any trend changes, as I was saying in yesterday's video? And thereafter, take a look at our big tech names and derive the same conclusions. Are there any notable trend changes overall? And what price levels can we possibly derive for some action for trading or long-term portfolios? And that'll be it for today. No portfolio recap. The next one, I'll remind you, comes on the Friday session. So should be a very fun video, guys. Let's jump right into it, shall we? So in terms of the SPY, as I said, up 1.5, the Q's up 2.27. Overall, the heat map was looking quite good today, although it was looking a lot better this morning. It ended up pretty nice. Financials and tech carrying the markets on their backs today. Consumer defensives taking a bit of a day off, so did energy, but industrials and healthcare did perform quite decently on the day overall. I would say that it was a more broad-based market than not, but we did have some pain points here and there. On the one-day relative performance, you can see that even better, to where technology and consumer cyclical led the rally to the upside. To the downside, only energy and consumer defensives, as people rotated from the value sectors into the growth sectors from those comments on tariffs last night. On a one-week relative, after two very nice green days in a row, most of the market is indeed green, led to the upside by energy and financials. To the downside, surprisingly, tech is still negative week over week, because last week was a very bad week for them. And healthcare, additionally, continues to remain down, largely brought down by that very big earnings drop on UNH, which is a significant weight in that index. So before we cover more technical analysis, guys, let us dive into the news articles of the day. And just a forewarning, it might confuse you. So what happened this morning? We were on a very nice high point in the markets. And then just around 11:15, unfortunately, we got comments from Scott Bessent clarifying some of the comments that Donald Trump was making yesterday, and that even he himself made yesterday. U.S. Treasury Secretary Scott Bessent said on Wednesday he believes that excessively high tariffs between the U.S. and China will have to come down before the trade negotiations can proceed, but said President Donald Trump would not unilaterally cut tariffs on Chinese imports, basically saying, well, they're probably not going to lower the tariffs before they come to a deal, even though yesterday's comments were fairly bullish. That was piece of news number one. At the same time, I don't think it's in this article, but he said that possibly, right? Oh, it's right here, right? 2 to 3 year timeline, saying that this referred to the full rebalancing process, not the negotiations for a deal. So initially, that's a headline that kind of caught investors off guard this morning when he said, well, you know, trade negotiations may take 2 to 3 years with China. He kind of walked it back a little bit, saying for a full rebalancing process instead of it. But at that point, the damage was kind of already done. You saw it try to get it back. Then it just kind of faded throughout the rest of the day. We also had comments by a Chinese foreign minister of affairs saying that China is not looking for a trade war, but they are also not afraid of it, that the door still remains open to negotiations at any time, but that the negotiations have to be done in a respectful manner on both sides. He also said that China will not be blackmailed into a deal, saying that the pressures that the U.S. administration had been putting on them to make a deal is not conducive to fair and proper negotiations. So those are also comments by China. And then to wrap it all off, at the end of the day, the reason that we're slightly offside in terms of futures right now is we had some confusing news come out of the Trump administration from himself in the after hours. Donald Trump to exempt car makers from some U.S. tariffs. But it gets a little bit confusing. The move would exempt car parts from the tariffs that Trump is imposing on imports from China to counter fentanyl production, as well as those levied on steel and aluminum. So, there's several layers of tariffs right now. There's the baseline 10%, there's the fentanyl 25%, and then there's the reciprocal portion, which goes up to 145. So he's exempting them from the reciprocal part, not the fentanyl part, maybe the 10%. We don't know. It's not very clear. The exemptions would leave in place a 25% tariff imposed on all foreign-made cars from other places. A separate 25% levy on parts would also remain and is due to take effect from May 3rd. So you see, cars, yes, but car parts still 25%. It's somewhat unclear amongst these various levels of tariffs, right? Although Washington has already shielded autos from the reciprocal tariffs announced on major trading partners, U.S. auto companies have in recent weeks pushed for further exemptions, and apparently they have got them. Now, in the after hours after that news, well, Ford and GM had a little bit of a pop, but it was immediately sold off thereafter, as the clarity behind those exemptions is just not really there to make a final conclusive decision. Now, thereafter, guys, we also have some further comments from Trump during this exact same session, during which he was signing executive orders saying in the Oval Office that what happens with the tariffs on China depends on them. He adds that the high tariff basically means China isn't doing any business with us. Trump also insisted that he was not bringing down the tariffs on Chinese products until a new trade agreement was negotiated on with China, rather. So it just goes to show throwing a bit of cold water, but at least now, although it's somewhat unclear and it's a whole bunch of, well, Scott Bessent is saying this, Donald Trump is saying this, Caroline Leavitt, the press secretary, is saying this. It's a whole bunch of semantics right now, right? He said, she said, and trying to derive some conclusive evidence. We don't have a final answer right now, but we do have a framework, right? We know that the tone has been drastically reduced from being very aggressive on these tariffs to now being walked back to a more friendly negotiation deal, although we don't have a formal deal on the table just yet, right? I know it may sound confusing, and to be honest with you, I mean, this is a huge move, right? Just on those comments alone, it moved down the markets 2% on the SPY and more than that on the Qs, right? Just over 2% on the Qs just from comments. It goes to show you guys, the market doesn't care about the data right now. We saw it. It doesn't move off of CPI. It doesn't move off of anything, right? The only thing the market cares about is tariffs right now. And I've told you guys many times on this channel, the trading plan, if you're trading, is very simple, right? Establish positions on the trend changes on the smaller time frames, such as the hourly, into daily support off of daily higher lows, and then take your profits near the highs into resistance. Same on the Qs, right? On big green days, don't get too greedy, don't get FOMO. That's your take profit area. And on big red days, when it seems like the sky is falling, utilize that volatility to write puts below the market. It is my favorite strategy to run right now. In terms of a long-term portfolio, the basis remains quite simple. Statistically and mathematically, it's been proven again. Every single paycheck, guys, 10 to 15% of your earnings should be contributed for your long-term future, buying high-quality companies either individually or buying high-quality ETFs and just embarking on a DCA process. That is the best thing to do right now. So that is everything for your introduction and your news recap. So before we get into the TA portion of the video, let us get into directly the earnings, right? So we're going to start it off with a pretty good one. And we're going to start it off with Chipotle. So CMG coming out with earnings after the bell. And you can see from their market performance in the after hours, they were down 2.17 from top to the bottom of the earnings move, at 1 point down 6. And we can see, I'll show you guys why, right? They did beat on EPS here by about 5%, but they missed on revenue. So before we get into the fundamentals, let's dive into exactly what happened with those earnings. Chipotle misses revenue estimates and gives more cautious outlook as it sees a slowdown in spending. We've heard that from other people as well, other retailers, not just food brands, but retailers such as Walmart just about a month and a half ago. On Wednesday, they reported weaker than expected quarterly revenue after its same-store sales declined for the first time since 2020. This was one of Chipotle's winning points in the last 4 or 5 quarters. Everybody else's same-store sales, such as McDonald's and other people, were going down, but Chipotle was still very strong, between 4 and 6%. Well, now apparently that slowdown has even caught up with Chipotle. Executives cited both a slowdown in consumer spending and adverse weather as two factors that dampened demand for its burritos and bowls. The company also lowered the top end of its outlook for full year same store sales growth. That is the reason why they came down, guys, is they lowered their guidance. So, moreover, net sales rose 6.4%. The same store sales fell 0.4% during the quarter, short of the 1.7% growth projected by the street. That is a big miss. Restaurant transactions fell 2.3% and were only partially offset by a 1.9% increase in average check, partially due to price increases from the company. It's not as if people were buying more when they were at Chipotle. It's just because of the price increases, the average bill was higher. The company doesn't expect traffic to its I'm so used to seeing tariffs, guys. I read traffic as tariffs. My bad. The company doesn't expect traffic to its restaurants to grow until the second half of the year. Here's what the CEO had to say. I am confident that we have a strong plan to return to positive transaction comps by the second half of the year. And during these uncertain times, we will continue to invest in the things that make Chipotle a special brand: our people, culinary, value proposition, innovation, and growth. Beautiful quote by the CEO, but of course, you guys know the sentiment has somewhat been soured. For the full year, Chipotle is now projecting same-store sales will grow by low single digits. Previously, it was forecasting same-store sales growth in the low to mid single-digit range. So dropping that mid-single-digit range to now low single-digit range, right? Low single digits is like 2, 3, 4%. Mid to high single digits is 6, 7, 8%, right? Now, the company reiterated its plans to open between 315 and 345 new restaurants by the end of 2025. That's how much they usually open on a yearly basis. And they did report net income of $386 million for a cool 13.4% net income. Now, let's get into the valuation here. Is Chipotle a good company to invest in? Well, it depends on the price, as per always, right? If we take a look at their metrics right here, on the bottom half of the right-hand side here, you'll see that their net margins in the last 5 quarters have been anywhere between 11 and 15. So coming in at about 13.2 right now is somewhat average and standard. No crazy margins for them this quarter overall. You can also see that although they do bring in a decent amount of free cash flow per year, their debt has been increasing as they expand their store count. Very normal and natural for a company to be doing this, such as Chipotle. And they do produce a decent amount of free cash flow per year. In terms of their growth, well, we can see here the growth prospects look pretty good. EPS will be steadily climbing in the next 4 years, and revenue should be steadily climbing as well as they increase that store count. And people still do stay very loyal to this brand. Gives them a forward EPS or revenue growth rate per year through 2028 of 11% and an EPS growth rate of 16.5. This quarter was pretty good. Digital sales were 34.5% of the revenue. That's good, right? Because, you know, the customers don't have to come into the store. They're going through the Chipotle lanes, the drive-throughs, which are not actually drive-throughs, but more so kind of pickup lanes that you do in your car, and brought in a decent amount of free cash flow, which is an average quarter for Chipotle. Sometimes it's higher, sometimes it's lower. Now, at $47, where they currently stand in the after hours, is this company a good deal? We know that it ran a tremendous amount here in the last 5 years, and the company has been trading relatively rich with this decline from its all-time highs of approximately now 30% plus. Is it a good deal? Well, at $47, the forward price to earnings ratio is still a 36.15. In this market, that is relatively high, especially if you're expecting further consumer slowdowns with a possible economic downturn. If the tariffs are maintained, you go into a recession, stands to argue that people will start eating out a bit less. So this is a bit of a rich valuation in terms of these current economic times. It gives them also a PEG ratio. Divide this by your EPS growth. PEG ratio of 2.2 on a forward basis, which is also very high. Free cash flow yield at 2.2% is a bit low. And in terms of comps, price to sales is a 5.26, which is not bad considering the fact that McDonald's is an 8. So all in all, varying metrics right here. Price to sales is okay, free cash flow yield is low, and the P ratio is a bit high. So the valuation of Chipotle, in my opinion right now, guys, it is still rich. Even though it's come down, it is still rich. Would I be a buyer of Chipotle? Not personally, guys. I think the crazy growth of Chipotle is largely beyond us now. They'll be able to maintain and gain a little bit of market share, but are we going to be able to see a 2x on stock price as fast as it's been able to do it in the past? Possibly not, but is it a very solid company? Yes. Where would I be likely to acquire some shares? possibly down here in the $40 to $35 range. I think that's a fair price for Chipotle and does give me a much better price to then go for that expansion. Free cash yield will be better. The price to earnings will be better as well. At that point, largely almost below 30, which is kind of where I want to buy this company. But if I were in this company, do I see any reason to sell at these prices? No, but just understand that in the future, the company's probably not going to be growing as fast as it has done in the past, but a very solid company nevertheless. So that's everything for Chipotle, guys. Now let's move into company number 2, which is going to be Texas Instruments. Now, we don't often talk about Texas Instruments on the channel, but they are a very integral part of the semiconductor industry. Mind you, they're also a very large weight in several semiconductor ETFs. SMH, the large one that we track, you can see that TXN is all the way down here at about 4.32%, which is a very heavy weight. In terms of the SOX, the SOXX, the iShares product, well, TXN is actually number 3 with a weight of 7.5%. So they are important, and when they do report earnings, we do have to listen. If you're unfamiliar with what role TXN plays in the semiconductor industry, it's probably normal because they're not a flashy company, they're not a sexy company, but they do make so many different parts for various things from amplifiers, audios, data converters, sensors, RF and microwave, power management, so many little semiconductor parts and chips for those things that go into either aerospace and defense products, automotive products, personal computing products as well, commercial and industrial applications as well, such as switches and multiplexers, you know what I mean? So a lot of motor drivers as well, a lot of things that you just don't hear too much about, but that they do have a very large volume of units going into many different things that you may or may not use on a day-to-day basis, right? So in terms of Texas Instruments, how did they do? Well, in the after hours, they were up 4.71%. They're kind of holding this exact same range low that they have been since the bottom of the market in 2022. Now, taking a look at their earnings, TXN rarely misses. If you go back, look at all these quarters, they very rarely miss, right? It's not so much of a growth semiconductor company as it is more of a kind of value semiconductor company, if that makes sense. It's still cyclical, but you know, it's not NVIDIA or something like that, right? So earnings, 19% beat, very nice there, and a nice surprise on revenue by 4.12%. Let's get into a little bit of the article here, and we're not going to spend too much time on it, but Texas Instruments Q1 earnings, revenue beat, EPS beat, and strong guidance. They are prepared to navigate the evolving supply chain dynamics. Special shout out to, of course, the tariffs. Total revenue climbed 11% year over year and 2% sequentially, which means quarter over quarter, as all markets saw a quarter over quarter increase, with the exception of personal electronics, which the company attributed to seasonality. I'll remind you, Texas Instruments suffered from the exact same thing that many semiconductor companies suffered from over the past few years. It was an inventory buildup during 2022 and 2023, and we are still wondering, where is the cyclical bottom going to be? We had an incredible pull forward of demand for everything with all these stimulus money and free interest rates back in 2020 and 2021. Anything from personal computer, personal electronics, automobiles, industrial applications, heavy machinery, and everything in between. People and businesses alike were modernizing all of the things that they use on a day-to-day basis. Thereafter came a problem. We went into a high interest rate environment. Businesses stopped spending money as much, and consumers did the same. As a result, for the past 2 years, we've been in some kind of cyclical lull for not only this business, but a lot of these companies look the same. Look at ON Semiconductor, same chart, yeah? Look at MCHP, same chart. So many of these companies are going through this cyclical pattern, and that's why semiconductors, since last summer, for the most part, haven't done anything. A few of them are better insulated, the ones that have a lot of revenue coming from the data center expansion, but every other business that does not have that segment of revenue, they've all been caught in a cyclical, right? A cycle essentially, because we know semiconductors are a cyclical industry as a whole. They ebb and flow with the demands of the economy. They're not resilient as something like a Microsoft would be, right? So that's where we're trying to find the bottom on right now. And they just said that again, personal electronics was a bit weak. Here's the revenues by operating segment. You can see analog right here. That was a nice quarter over change, and year over year, 13%. Embedded processing, quarter over quarter change, 5.5, but down on a year over year basis. And other, a very tiny segment of the business, was down quarter over quarter, and year over year, however, was up, right? So decent year over year comps for TXN, but still trying to find that cyclical bottom overall. Yeah, you can see that revenue in the analog segment right here. It's just been coming down, and we're still trying to find that next growth phase for the company. Same thing for embedded processing, right? Down. We're still trying to find those lows, and other segment as well, down since 2022, and still trying to find those cyclical lows overall. However, TXN is a very solid company nevertheless, guys. Don't get it twisted. Texas Instruments, for their outlook, sees second quarter revenue of 4.17 to 4.53 versus the estimates of 4.13. There is your raise on revenue guidance, and second quarter earnings between 121 and 147, which is well above the previously established guidance of $1.23 per share. So it's nice. They're raising guidance even amidst the market turmoil right now. They noted on the conference call, it doesn't expect any near-term impacts related to macroeconomic uncertainty. That was good, but the company will take a cautious approach as there are many things still changing. Texas Instruments said it's working with customers to understand and support their needs and is prepared for a range of scenarios in the second half of the year heading into 2026. Not a bad quarter for them at all. 28.9% net margins, which is good. If you can see here, when times are really good for them, such as 22 and 2023, well, the margins are super juicy, talking about 40%. Otherwise, their margins are around here. High 20s to low 30s is average for Texas Instruments, and this quarter as well did not disappoint in that respect. Now, in terms of their financials, right, in terms of their balance sheet, increase in debt, right? They've been utilizing a lot of free cash flow to modernize their equipment and their properties and just expand for the next growth cycle. That's why free cash flow has been roughly down in the past 2 years, and they've also taken upon themselves to increase their debt load for that expansion. Several different companies are doing that. Micron is another close example of another one. Moving on to their expectations for the future, as we saw, EPS should be going up over the next 4 years. We might be finding the cyclical bottom during this year, and even revenue may be finding the cyclical bottom amongst these 2 years and then expanding nicely into 2028. So, is this possibly the time to start a position on TXN and go for that cyclical recovery for the next 4 years? Well, possibly. It is definitely not a bad proposition in terms of fundamentals, growing a revenue and EPS very nicely. EPS growing this fast because we're starting from a low, of course, right? That's kind of when you want to buy these companies. Forward price to earnings at 160, 29.63. However, with this amount of EPS growth, it gives them a PEG ratio of under 1. Fairly valued for the company, in my humble opinion. Free cash flow yield is very low, but then once again, that's just because they've been spending so much money, right? TXN usually has a free cash flow yield of between 4.5% to 5.5% when they're not spending so much money on CapEx. And you can see the analyst price targets here around the 190 mark. So TXN, do I love it? Well, it's a very solid company. It's not my first pick because it's not the cheapest. That would have to go to a company like Micron or TSM. But special shout out to TXN. They do have their place in the semiconductor landscape. They're a very large company and a critical player in that space overall. We are into support right now. I would not be opposed to playing short puts below this range of support. And even for a bit of a swing trade, guys, if we're trying to swing trade from here back to the highs, or a longer duration swing for expansion of the company, something like a from here and then expand beyond the all-time highs as they get into their flow for the next 2 years coming out of weekly oversold conditions. You know, even though it can drop more, guys, it is a very good proposition to be building a position on this company. You can see, I mean, they've been very, very, very solid, right? We're hitting some historical levels, 2-3 years worth of support. Not a bad buying proposition overall. It doesn't make the cut for a long-term portfolio add to me. It's just, in my opinion, the monopoly status is not as strong as something like a TSM or something like a ASML, but it is a very strong company nevertheless and could be a very interesting one for a swing trade as well. That's everything I had for you guys on TXN. Hopefully you guys enjoyed that one. And now let's get into the last one here, which is going to be a fun one. ServiceNow. So ServiceNow, I very rarely talk about it on the channel. And that is partly because, well, it's just not a flashy nor a sexy company. Nobody talks about this company, but it just continues to print gains. Look at their quarterly earnings. They literally almost never miss earnings. They haven't missed one earnings in like the last 7 years pretty much. And the chart just keeps going up, and the company does still remain ever so expensive. So ServiceNow, what exactly do they do? Well, they are an enterprise software, enterprise resource company, kind of like CRM, but not quite. CRM is more client focused. It allows companies to track client interactions better and have a detailed description of what's going on in those client interactions and how the business can best serve those customers. ServiceNow does the internal portion of enterprise resource management. It makes the company itself more efficient, not so much the company's interactions with customers, although that's coming as a component of the company. But for now, it kind of does some efficiency building between various departments of a business. It's an enterprise resource planning, which sounds like a fancy term, but the description is in the term. It helps companies internally better utilize its resources, such as employees and various processes. That being said, their fundamentals are extremely strong. Before we get into the charts and the article, I just want to show you, right? It's a very strong company. They have decent net margins for a SaaS company. They have been rising as of lately in the last 2 years, but look at their revenue and EPS, right? Revenue and EPS, special shout out to them. Very solid up and to the right on EPS and very solid up and to the right on revenue as well. Taking a look at their balance sheet, guys, well, their balance sheet is also extremely solid. Not that much debt at all to speak of, and is starting to quickly become a free cash flow machine at this point. A lot of cash on the balance sheet, but every year they generate more and more and more and more, and will be improving their margins in the process. Now, in terms of what happened during the report, it was actually quite good. If I just take a look at the headline numbers right here, they beat by about 5.47 on EPS, and they did beat marginally on revenue as well. Now, taking a look right here, ServiceNow exceeds guidance across all Q1 2025 top-line growth and profitability metrics. Now, we're not going to go through all of them, but here's a screenshot, right? Screenshot if you want to, right? I found this one on Twitter pretty much. Not only did they beat on their year forecast, they beat on their second quarter forecast as well, raising the subscription revenue fractionally versus the forecast, but all profitability metrics, guys, they beat. They beat on adjusted gross margins, they beat on professional services margins, they beat on free cash flow. So a whole host of numbers, they beat on everything. They just keep beating, which is why they say they beat here in this is their report, right? They beat on absolutely everything. Now, subscription revenue is now up 19% year over year. So what exactly is the company doing? Well, ServiceNow's position as the platinum standard for enterprise-grade AI drove these outstanding first quarter results. Implementation of AI is definitely helping a company like ServiceNow. Q1 was a quarter of great execution in a dynamic market. I like his choice of dynamic, right? That definitely is true. Our use of AI internally also continues to drive meaningful OpEx efficiencies, meaning more profit, yielding strong profitability and free cash flow. In times of uncertainty, customers focus on maximizing ROI and reducing costs. This is true. However, we know that in the past 2 years, companies have been cutting costs on various software as a service companies. Are they cutting out ServiceNow? No, because ServiceNow actually makes these companies more efficient. So you wouldn't want to cut costs on a service that's helping you cut costs, right? So at least they're kind of a defensive software as a service player, I assume. That's exactly where the ServiceNow platform excels, and we are at the forefront of the AI opportunity to drive even greater value for our customers. Those were the comments by the CEO. No comments on tariffs, nothing like that. Just more comments on how they're using AI. One of the new features here is unveiling AI agents for the telecom industry, similar to CRM. So now they're also trying to attack the whole customer side of things, kind of like CRM is doing, to drive productivity across service life cycles. Built on NVIDIA AI, the initial agent use cases will help communication service providers autonomously handle common, labor-intensive workflows in customer service and network operations, speeding up problem resolution and improving customer experiences. In other words, they are going to help these companies replace a bunch of customer service jobs with AI agents, right? Call this agentic AI right now. That's the fashionable term as it appears, right? In terms of in terms of the rest of everything, if you take a look at their slides a little bit, you will see that 8,400 global customers. That's massive. Includes over 85% of the Fortune 500 companies overall, guys. In terms of their guidance was also good. They beat their guidance in terms of what they're expecting in the future here. Q2 was very nice, expecting more growth here, 19.5% for service subscription revenue growth, and GAAP operating margins will be roughly the same, but a tiny little decrease right there. Current remaining performance obligations also up 19.5, about $10.5 billion still in the pipeline for them in terms of remaining performance obligations. That's pretty good, guys. $10 billion, that's literally like almost a year's worth of revenue for them. So nice to see that their pipeline is still indeed full. Now, comparison to previously issued guidance, you can see that they beat on both counts right there in terms of subscription revenues, which is very good. Now, moving on further, this is Q1, and this is for the whole fiscal year. So maintaining and raising guidance ever so slightly. That's what you want to hear from these companies. Year-over-year subscription revenues growth. Well, I'll bring your attention to one thing, yeah? The blue is previous year growth. The green in the middle is actual growth. As you will see, like NVIDIA, this company's revenue growth is slowing down. Now, above 20% revenue growth is nothing to shy away at. However, it is no longer 25 to 27%, right? So it's slowing down right now from where it has been. So when we do the valuation later on, this is going to be a key component of that valuation. So keep this in mind, yeah? Now, moving on further, remaining performance obligations, as we can see into Q1 2025, remaining that they increased right now is pretty good, 10.31. Still have non-current RPO, 11.8, but the current remaining performance obligations, 10.31. So a lot of money in the pipeline still, which is very, very good. Customer cohort growth, as you can see, right? Well, very nice. Every single year, they continue to acquire more and more and more customers. Expansion of customer relationships is also higher and higher and higher every quarter, although starting maybe a little bit to slow down incrementally as they really move into their total addressable market, right? 85% of Fortune 500 companies, while there's only so much left that you can get. They have a very high renewal rate of 98%, which is absolutely fantastic overall. And GAAP revenues by geography, they have not lost any across any markets overall, maintaining their market share there, increasing headcount by a little bit. And their gross margins, as you can see, over the last roughly, 5 quarters, gross margins have largely been maintained. So very, very, very solid company overall. I can take you through each one of these slides, but, I guess you get the point by now, right? It's a very solid company. It's kind of a boring company right now. But that being said, sometimes in this market, boring gets the job done. They're up 10.25% in the after hours right now, sitting at $8.95. So in terms of the valuation, being a very solid company right now with a very solid pipeline, good net margins, improving free cash flow, no debt on the balance sheet, is it a good buy? Well, let's have a look here. EPS and revenue growth are very, very, very solid. But like we noted, it's kind of like NVIDIA, right? Revenue growth was very fast and now it's slowing down, right? So when we look at this valuation at a forward price to earnings of 55 at $900 and a forward peg of 3.24 with slowing revenues, that's when you really have to ask yourself the question, do I want to pay this much for a company that's growing extremely well the next 4 years? No secret there. But do you really want to pay this much for a company that is maybe topping out in terms of its revenue growth and going to a more streamlined linear revenue growth pattern, kind of like NVIDIA? Well, that's up to you to decide, right? Free cash flow yield is 2.11%. Price to sales is 12.9, which is also very high. And their closest competitors are CRM and SAP. Now, I mean, this company, guys, don't get me wrong, it's a fantastic company. Granted, I would love it a lot more back down here at 700, but now it's kind of pulled away from there. It's still off the all-time highs by about 28%, but you could argue that up here, it was somewhat significantly overvalued in terms of what the analysts are saying. Well, you can take a look at what the analysts are saying. They have a price target, an average of $1,000 up to $1,003. So you can get some upside, guys, but thinking that you're going to get as much upside as possibly the people back here got all the way till now, maybe not, right? It's already a $170 billion company. I can see this company 2xing over time, but maybe not in the span of a year, right? Maybe over the next 3, 4, 5 years. Yeah, they probably can do it. And it's a very solid company. If I had one enterprise resource planning, right? Enterprise resource company to buy between this, SAP, which is also a very, very strong company. We do not talk about it often. If I had one of these companies to buy, honestly, between them, CRM, and ServiceNow, I would probably go with ServiceNow, to be quite frank with you. I probably would, right? It's just, I mean, it's younger than SAP. It's high in demand overall. And overall, it attacks something, well, it attacks some of the same things as CRM, but I think that enterprises are going to be more focused on internally rather than client relationship management. CRM has all the hype. They have a very flashy CEO in Mark Benioff. They make the news a lot more often too. But when we compare against the two guys, I mean, look at these metrics right here, yeah? And then look at CRM, right? CRM revenue and EPS growth is not there. Granted, their valuation is also lower as a byproduct, but not by much. Not by much, especially when you look at the PEG ratio, right? I mean, it is, but still, right? And everything is a relative analysis at this point. So ServiceNow is a more expensive company, but I would prefer being in this one because I think it still does have a lot of upside. And overall, I just don't think it has some of the problems that CRM faces sometimes. I mean, it's a complex discussion, but if I had to pick between the three rather, it would probably be there. I would much rather prefer it at $700 overall, though. So that's my overall analysis on ServiceNow. Fantastic company, does not get talked about enough, in my humble opinion. And hopefully this breathes a little bit of a sign of relief in the software as a service sector, which really has been struggling as of recently overall. That is everything for our earnings recaps. Hopefully you guys enjoyed that. Now let's get into some charts, shall we? So we're going to go through these charts, guys. We're going to go through them very quickly. I did a very large in-depth analysis for everybody on the Monday and Tuesday videos. Now we're going to get right into it and go through these quickly because not much has changed. So the context always matters. Top-down analysis, right? Weekly, still a downtrend. Got a lower high in place. Trying to go for the higher low and go for the trend change. We do not know if the weekly higher lows are set because we do not have a confirmed daily uptrend shift just yet. That would be a break of the most recent highs right there. Resistance stays put 550 up to 565 and support stays planted below 525 to 495. The one thing you do not want to see happen is flush the lows of the Monday session. That would be a new daily downtrend. I would point to the fact that unfortunately this may just not be the weekly higher low and might be going a bit lower, but it does look pretty good. I took profit on a few things, a lot of things today, actually, with today's upside move, and any reversion to the downside, I will be loading up again, writing short puts near or around the fear lows. Very tough to predict in which way this market will break, especially because every single day, we get more tariff talks, more headline talks and everything like that. We'll keep taking it one day at a time. Moving on to the Qs right now, same concept, right? No new daily uptrend in place. Rejection at resistance 476 to 466. Support down below stays put 450 down to 430. Top-down analysis is very simple. Weekly downtrend, got the lower high, very nice bounce. Trying to go for the higher low and the trend change, but that only happened if you break the highs of last week and move into a new daily uptrend. We will keep it posted. One of two things will happen, guys. Either we can do it or we will devolve into some form of an awkward range. Worst case scenario is you just get the flush and then you have to consolidate a little bit more on that weekly time frame. If we move below the lows or into the lows, I'll be writing puts again below the market. Moving on to financials right now. This is notable. This is the first sector, guys. The first sector to establish the new daily uptrends overall. Higher highs on the XLF, was not able to close above resistance 48.31 down to 46.75. But this is noteworthy. Any move lower at this point can be looking for a higher low. Anything above 45.19, higher low, for possible trend continuation. This is the first sector which has reset this weekly downtrend into now a weekly uptrend attempt. Not looking too bad at all on XLF. We'll pay special attention to it. If it comes down, I might be looking to play the banks like Bank of America at the lows. I was telling you guys, if we can come down a bit lower, I'll play some short puts down there. JP Morgan, same concept. If we come a bit lower, I might try and play some short puts down there. But they have all now recaptured some weekly uptrends. This is a big shift. It's the first sector to do it. So are they leading the rest of the market? Will the rest of the market follow? Or have they jumped the gun a little bit early? And will they themselves get pulled back into the confines of this very wide volatile range? We will keep it posted, but that is definitely a lead bull in this market. XLV right now, still a little bit weak. No new highs, no new lows. Still trapped in a very volatile range. Volatile range of support, though, 140 down to 125. All the guys from 2021 and 2023. So keep that in mind. We are still in a weekly downtrend. The bounce size was okay, but now we're just trapped in this very wide range of volatility. No comments from me unless we break the highs of last Tuesday or these lows of the Monday session. You cannot say there's any clear short form of trend. My favorite name still remains UNH. And I'll continue to either play this one as a swing trade, call debit spreads from here up to maybe there, daily oversold conditions, could be an interesting swing trade, and or writing short puts under the market, coming into now 4 years of support, guys. This is 2021 overall. We covered their earnings. They got hit, in my opinion, a bit unfairly, considering the fact that we do have, the Medicare Advantage rates being renegotiated for 2026. They got hit unfairly. Their valuation right now is very cheap for this company. Super solid. They're my favorite play. On to semiconductors right now. So semiconductors up 3.65% today. Not a terrible day for them as well, but no new trend change. As we can see, top-down analysis, weekly downtrend. Got the lower high, looking for the higher low to possibly go for the trend change. If they do get it this week or next, we're into resistance, 232 down to 214. But look at this daily, guys, right? No new trend changes at all inside the trading range. Either one of two things: break the high of last Monday, then we can talk about a new daily uptrend into resistance and possibly a weekly uptrend shift as well. However, break the lows of the Monday session, daily downtrend, and you'll need to consolidate on the weekly a little bit more. So far, XLF financials are the only ones that have successfully completed the prophecy of the weekly uptrend shift. Very simply, if we move towards the lows, I'll keep writing short puts on my favorite names: NVIDIA, TSM, Micron, Texas Instruments, Qualcomm, whichever one is available and big red on the day. I'll write short puts down below there rather than trying to call this market either way. Do I go long from here? Do I go massive short from here? No, I'm not going to play this market directionally when we have headlines like this every single day. I'd rather just play the volatility and write puts under the market, but you do you. If you want to take those directional bets, be my guest. Just try to establish clear levels of stop loss. If you're long there, stop should be there. And if you were short here, well, the short invalidation thesis needs to be above these range highs. Moving on to IWM Russell. The Russell, because of financials being 18% of this index, daily uptrend right now. And also, look at this, trying to go for the weekly uptrend shift as well. The only problem is into resistance, like XLF, 200 down to 187. Big support from back there, big resistance as well, and big support. You can clearly see it's a very important level. Who is in control right now? The weekly bears, but now we got a weekly uptrend shift. Looking good. These monthly candles are closing quite soon. Is this maybe the bottom of the Russell? Possibly due for a little bit of a monthly rally? We'll see, but probably not a V-shape. It's going to take a two-step process, in my opinion, to solve this monthly correction right now. On the daily, though, looking good. New daily uptrend, looking for a daily higher low. Anything above 180, looking for a higher low for possible further trend continuation. Any moves down into the low, I may consider selling some puts down here, but that is the extent at which I want to play the Russell. Onto the Dow Jones right now, up 1.07%. No new highs, no new lows, trapped in a range. So, right, we almost lost the uptrend right there. Coming back a little bit overall, very, very messy on the Dow Jones. Weekly downtrend, very nice bounce. Trying to set the higher lows and go for the weekly trend change. But right now, trapped between two levels. Overhead resistance, 41.3 down to 40,500, and below support, 39.1 to 37,900. So if we're looking to make a play here, right, going for the higher lows for possible highs, watch the hourly trends. I showed you guys the patterns yesterday, yeah? Watch the lower time frames. All in all, though, guys, I will not be able to clearly say whether it's going up or down unless you give me a clear trend and reverse this weekly. Then I can say, okay, monthly consolidation is over, and then maybe we start recapturing the monthly timeframes overall. Going to be a very long and volatile process. So rather than trying to predict the headlines every day, predict earnings and everything we might have in April and May, well, why not just play the volatility? That's it for your major sector recaps. Onto the VIX. The VIX was down 6.94. Now into our range of, you can call it support, right? 30 down to about 23. It's the area that we tend to either be above in times of high uncertainty or below when times are good, but the VIX can stay high for a significant amount of time. That was 2022. This was post-pandemic, each 6 to 9 month periods respectively. The flash crash in 2011 was also a 2-3 month period, and the great financial crisis was almost a year plus of high VIX. So until these headline risks go away, until we get more clarity on the tariff policy, what it implies, who it applies to, what the final rates are, what the trade deals are, is China going to come to the table? The VIX, guys, is probably going to surprise you in every single fashion, guys. It can start off a morning very red, then go green intraday. Like the VIX was just all over the place today. You know what I mean? But one thing's for sure, we are not at the same fear catalysts as we were 2 weeks ago, because now we have at least more clarity at this point in time than we did back then. Back then, it was like 99% no clarity. Now, maybe it's only like 75% no clarity. You know what I mean? So it used to be like a massive cloud storm, and now like there's still clouds, but like the clouds are a bit lighter, in other words, right? Moving on to the dollar also recovering nicely. However, just pay attention, right? We don't know. They broke a very big level of support. This is literally 3 years of support, guys, at this point. 2 years, yeah? Are we just going to get a back test of this and move lower? I don't know, which is why I put a question mark right there. But something is definitely showing you that there's just an outflow of people from the dollar, people not wanting to buy U.S. equities or U.S. bonds as much as they perhaps did back then. That is just an objective fact, right? You can see it from demand of dollars versus lack of a demand for dollars. Whether this keeps rolling over further, that'll all depend on headlines such as these and resolution, right? Same thing for yields. Yields are going in both directions, push and pull because of all the headlines. Will they break to the downside? Will they break to the upside? Who knows? If things get worse with tariffs and reciprocity between nations, you might expect yields to rally a bit further. But we know that there's a Trump put here at 4.5 on the 10 and at 5% on the 20-year yields. We know that President Trump seems to be a little bit more nice in terms of his vocabulary when addressing these tariffs and addressing the, just the implications of these as to the future of the United States. So keep that in mind, right? He is closely watching the bonds. His administration is closely watching the bonds. Whether or not people trust it or not, whether or not people are going to clamor into the bond trade and start buying these 10-year bonds and 20-year bonds, it's going to be a long process, right? Trust has been broken, right? There is a lot of fear right now, a lot of uncertainty. For that to come back, you can't just snap your fingers, although I know many people would like that. It's an evolving situation. All we can say right now is that there is still a problem in the bond market in relation to lack of trust or lack of participation in the dollar, lack of participation in U.S. equities, and lack of participation in U.S. denominated bonds, which is why TLT is still low. I still like this trade, but it's going to take a long time to play out, in my opinion. Think like 6, 9, 12 plus months, right? Not just a question of weeks, unless we get some crazy tariff headline that just Trump removes all tariffs altogether. Gold, moving into gold right now. Gold consolidating finally, right? Daily consolidation leg on gold right now, reacting nicely from the 12 EMA. We'll see, guys, right? They're trying to recapture the hourly time frame right now. The whole time it's in an hourly downtrend. You guys know the drill, right? They were into daily consolidation. Technically speaking, when you recover the hourly uptrend, that is when you are now done the daily move down, and you give the bulls a chance to start moving higher, put another leg higher. Will it result in a lower high and lower low? That's to be seen, but one thing's for sure. It was big daily overbought coming into the 12, but look at the weekly, guys. This is my problem with this chart right now, this weekly candle. In my opinion, I would not be surprised if any bounce is a resulting lower high, maybe lower low, first daily downtrend that gold has seen maybe in a while for weekly consolidation. This weekly time frame needs to cool off, needs to touch the 12. If we come back down here, lower 3,000s, I might be interested for a bit of a heavier swing trade. But right now, still overbought conditions on gold. Into Bitcoin right now, Bitcoin remains above the level that it just recaptured. I cannot close this candle. I cannot close this box green, guys, until we close the week. The Bitcoin weekly candle closes on Sunday. We'll see if they can close above it, right? This whole area is 92,000 down to around 87,000. Daily option is very nice right now. I've been showing you guys this trade all week where BTC is now clearly outperforming gold. Clearly, right? How long will it last? We don't know. But what we do know is that Bitcoin has been the outperforming asset as gold has come down and Bitcoin has gained a level, maybe playing a bit of catch up. If we just do the infamous higher low into higher high, next zone of resistance stays put all the way up here. Well, first one is very clear at 96, yeah? But the actual one, of course, is the all-time highs, so keep that in mind. Just going to be looking for a higher low at this point, anything above 83.5, looking for a higher low for possible further trend continuation. So any pullbacks here might be worth a bid for a swing trade, right? Stop goes below there, then you're charting first TP1, 96, TP2, all the way up there. That's it for a swing trade on Bitcoin. The weekly is looking pretty good. If they close it like this, right? Trying to go for the new weekly uptrend and also trying to go for a bit of a monthly push. This candle closes in 7 days. We'll see what we get, but is looking very good right now, all things considered. That's everything for your broad market rundown. Now let's get into some tech names. So taking a look at Apple right now, Apple, same concept as the SPY and the QQQ. No clear trend change, not below the lows of Monday, also not above the highs of last Monday overall. So this Monday versus last Monday, overhead resistance stays put 220 down to roughly 210, and below support stays put 196 down to 187. The weekly bears are still in control of this chart. Very nice bounce, trying to go for a higher low into support, trying to go for the weekly trend change. But until we get that weekly trend change, we cannot say the bulls are in control of this chart. It could be very volatile. One thing's for sure, if we move to the lower end of this, I will gladly write short puts on Apple again down below here. I've been having a very fun time writing them every single week. Hopefully they give me a bit more opportunities, but if you were in the trades from yesterday, as we were portraying on the channel, stop is below there. It should now be moved up to at least break even to where you entered, right? And the take profit zone is obviously into resistance. Apple, solid company, but they do have their problems. The problems being very flat revenue growth overall and just, the overall tariff situation. But Apple's not looking terrible here. Moving on to AMD, up 4.79 today. Very nice, but no clear trend change either. Not breaking the highs of last Monday, not breaking the lows of this Monday either. Inside trading range, trapped between resistance 112 to 98 and below support, which is a very wide level. It is 83 down to 65. It is all the guys from 2022 and the bottom end of the 2021 market as well. No clear trend change on the weekly. This is a weekly downtrend, clear as day. Nice bounce, trying to go for the higher low and trying to go for the higher high, but still no higher high in play right now. One thing's for sure, if we keep pulling back on AMD, I will gladly write some short puts in the higher $70 range. AMD, great company, cheap valuation, but tariff news, China news, everything like that is affecting it. But one thing's for sure, the valuation is very cheap. So if that's your long-term thesis, could be a decent add to a long-term portfolio as well. Moving on to Amazon, Amazon up 4.28%, was up 7% at one point today. Still not breaking the highs of Monday, not breaking the highs of this Monday. So this is last Monday, and this one is this Monday, right? Not breaking either of those levels. So we knew that Amazon was in a daily downtrend. Nice bounce, looking for a higher low now. You want to get the trend change back? Give me a higher low, give me a higher high. So anything above 165, going to be looking for a higher low, for a possible trend change. And now we are into resistance, 191 to 181, which is why we get rejected. All these guys and just the overarching area, which was a challenging area from earlier in 2024. Also, no clear trend change on the weekly. Very nice bounce, looking for a higher low, looking for a trend change, but as of right now, nothing confirmed. These monthly timeframes on everything look very good for possible rally into May. We will see. It all depends on their earnings. They have earnings next Thursday. One thing's for sure, around 190. Amazon's valuation is good. It's one of the lowest ones they've ever had. The PEG ratio is decent. They're improving profitability, most free cash flow ever. All lines of business are expanding. One of my favorite plays into the next 4 or 5 years. Fantastic area for a long-term portfolio. For swing trades, very simply, guys, this was the take profit zone from any buys right there. So keep that in mind. And if we do pull back, I will be gladly playing Amazon short puts in this area to play the wheel. Moving on to Google right now. Google up 2.5% today. And overall, same concept. No breaks of last Monday's high, and also no breaks of the low of this Monday's high. Inside trading range, very simple, right? Weekly downtrend, got the lower high, very nice bounce, looking for the higher low to change the trend eventually. But we're just in an awkward trading range between two levels. The levels are resistance, 175 down roughly 163. And below support, which is a very solid one, is 149 to 135, which is the highs of 2021. Now, keep in mind, Google has earnings tomorrow. I will be playing earnings. I will be playing short puts as deep as I possibly can into this support range, preferably below 140. So keep that in mind. The expected move on Google for tomorrow is going to be, take a look here, right? 5%. So we'll see. 5% to the upside on the weekly time frame. You will see 5% to the upside. You might get a new weekly uptrend. 5% to the downside, you are right back down into the lows, and you will just evolve in this very wide and volatile trading range. So the best thing you can do is just play the volatility rather than picking a direction. But for a long-term portfolio, this one is very cheap, and I have been adding some shares myself. Moving on to Meta right now. Meta up 4%, but same concept, guys. No trend change. If anything, it's still a daily downtrend, looking for a lower high, right? So forfeiting a bit of the gains today, you'll want to see the bulls put in a higher low and go for a brand new daily trend change. This is a very nice bounce on the daily time frame, 618 bounce. Can they get it done before their earnings? We will see. Who knows, right? As of right now, same as the rest. Weekly downtrend, very nice bounce. Looking for a double bottom at this point, because that's what's happening right now. If you don't get it, the bottom end of support right here is 450. You would not want to see them break 450, guys, because after that, there really isn't much until this weekly 200 EMA, which is around 400. So Meta right now, fantastic company. They have earnings soon. Their forward price to earnings is very cheap. Their PEG ratio is very cheap. The overhang from this company is the DOJ article. Will they be having to break up the company, sell off Instagram, sell off WhatsApp? And also, are companies going to be pulling back on advertising spend because of the economic uncertainty? That is what we're going to hear from Meta next week during earnings. Moving on to Microsoft up 2%. Same concept though. No breaks of Monday, the 14th of April to the upside, and no breaks to the downside. As a result, no new trend. That being said, we did lose this into a daily downtrend. Now we're trying to get it back. Very volatile and wide range. The clearest chart is the weekly. Weekly downtrend is very clear right now. 100% engulfing bounce. Very nice. Looking for a higher low and possibly go for a trend change. But that'll only happen if you break and close above 395. Microsoft has earnings next Wednesday, so we'll get to hear from them. And overall, same concept, guys. If we start moving towards the lows again, I will gladly write short puts in the lower end of the support range, which starts at roughly 345 and goes down to 322. It's my favorite way of playing it. Here, is it a good add for a long-term portfolio? I've been very clear this entire time has been a very good time to add Microsoft. If you have a 5-10 year time horizon, you're looking for one of the best tech companies in the entire markets in terms of how resilient they are. Moving on to Netflix right now. Netflix only up 1% today, but not yet setting a brand new all-time high. Still struggling around that $1,065 mark. Hopefully they get a stock split soon, guys, so some of us can start trading options on this, right? Moving into the analysis, though, Netflix holding up better than most stocks out there. Beautiful daily uptrend. Any move lower looking for a higher low. Anything above 895 looking for a higher low for possible further trend continuation. If we pull back, the logical area of pullback is going to be these guys right here. I mean, I can broaden this little box and include these guys so it makes more sense, yeah? In or around the 12 EMA and all the EMAs and these guys, right? This area of congestion, that is roughly between 990 and 954, looking for the infamous breakout, retest, and possibly run, question mark. We will see, but it's looking good. Weekly uptrend is looking very solid as well. Any pullback on the weekly looking for a higher low. For these similar breakout, retest, and maybe run, Netflix has proven itself to be one of the more defensive tech companies in this market. As you know, people assume that if you go through a recession or economic downturn, not many people are going to cancel their Netflix subscriptions. If anything, they might even stay home and watch TV more rather than seeking outside sources of entertainment, which could be more expensive. Moving on to NVIDIA right now. NVIDIA up 3.8%, but same concept, right? No breaks of Monday, 14th of April to the highs. No breaks of Monday lows. Inside trading range. We noticed that this was a daily downtrend. Now the bulls have to start everything from scratch. Give me a nice size bounce. Then we could talk about resetting this, right? So resistance right now, 115 to 105. And below is the huge area of support, 95 down to 76. Clear weekly downtrend on NVIDIA right now. They got a very nice bounce on the weekly, trying to go for the higher lows, trying to go for the trend change. But until we get it, we cannot say that it is confirmed in the camp of the bulls. My favorite way of playing this one is playing short puts well below the markets. Now you guys understand why I play these short puts and I don't go with weekly call options, weekly put options, not try to predict direction, right? Because it's so hard. The range is so wide and there's a counteracting effect here. Weekly is in a downtrend, but the bulls are trying to go for something here. And we're also just trapped between areas overall, resistance and support. And we also have headline risk. So knowing all that, my favorite way of playing it is just say, you know what? I'm not going to try to make a bet from here, except if it's adding it to a long-term portfolio, then it's simple, just DCA, right? But if I'm looking to do something, I'll sell puts around the fear lows. Moving on to Tesla right now, 5.37% to the upside today after their earnings, but still no progress, right? Overhead resistance, 300 down to 260 overall on Tesla. It is a very big area, guys. It's been resistance for like a month. Resistance, 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 resistance for these guys, support and resistance. All the way back from 2020, this level keeps coming up again. And below us is no different. This is big support, 220 down to 200. Another big level that keeps coming back time and time and time again, either as support or resistance, depending who is attacking it from which side. That being said, lack of a clear trend on Tesla. Give me a break of last Monday, and then we can officially say, okay, well, nice engulfing move. Now go for the trend change, right? And also, if you break that, you will be setting up the door for a weekly uptrend shift. But as of right now, just stalling. So my favorite way of playing Tesla right now, rather than saying, yeah, it's going back to 400 or yeah, it's going to 150. Well, every week or every 2 weeks, I'll just play some short puts on some red days down below here. And if I get assigned, at least I know I'm getting the best possible price rather than trying to predict the outcome of every day when a market can be moved by headlines. Moving on to Palantir right now. Now, Palantir is a trend shift. So this is what I'm talking about. This is what you need. Daily uptrend is now confirmed by the Palantir bulls, right? Now you have confirmation. Now on any pullback, you can make an attempt for follow through with a stop loss and target a level. Now you have confirmation. So this is a clear chart, crisp and clean. Moving on further, the weekly as well, guys. Weekly downtrend, big engulfing move, and going for a weekly trend change. So Palantir looking good in both respects. That being said, if we do pull back and undo the whole thing for some reason, which is also a possibility, and just go into a bit of weekly consolidation, support level stays planted, 84 down to 77. My favorite way of playing this. On a big red day, I'll be looking to sell puts well below the market, but Palantir remains expensive. Everybody knows that, especially if it's at $100, and their earnings are coming up in about 2 weeks' time. We will get to hear from them if they deserve this valuation, if their growth is accelerating, is it slowing down, is it exactly the same? That is what we'll want to know, is are these metrics improving or stay the same? It should give us more clarity on the valuation of the company. Moving on to SOFI. SOFI up 4.17. Now, this is a very clear chart as well. Clear, confirmed daily uptrend. Higher lows are put at 1050. Any move lower, looking for a higher low for possible trend expansion for the new daily uptrend. Moving on in. Weekly is also now a confirmed weekly uptrend. Looking very good, yeah? Big weekly downtrend. Nice bounce. Get the higher low. And now you got the weekly uptrend. So nice. Now we can say monthly consolidation is finished. And we might just be looking for a bit of a recapture. The next big area you'd be looking for some expansion would be up here. So if I'm looking to take a wide swing trade on a pullback, my stop goes below there. Then TP1 is these guys all the way up there at 14. So keep that in mind. These are the charts that are more clear. If we undo everything, no problem at all. I will go for some more short puts and get some more SoFi shares down below there. $9.50 to $9 is my sweet spot where I do love writing some put options. Valuation of the company down here is quite agreeable. Moving on to Uber before last, 0.94%. Uber, big top to bottom move. They hit our take profit zone. Been calling this one out this whole time, that if we get the leg of expansion and if you were positioned long, that was the take profit. So hopefully you guys capitalized on that because it did give you an opportunity early this morning for about half an hour. That is the whole 80 down to 77.50 region. Now, that being said, we are still in a daily uptrend overall, right? I know it's a bit messy, but it is still a daily uptrend. The higher lows are right there, 71.44, looking for a higher low, possibly for an attempt number 2. It's a very awkward, like massive kind of inverse head and shoulders pattern here on Uber. All things considered, on the weekly timeframes, nice engulfing move. Any move lower looking for a higher low, anything above 61. So if you want more clarity on the longer timeframes here, it's clear what the bulls want to do, right? They want to set the higher lows and they want to go for the expansion of this chart, maybe even the monthly new expansion for Uber to the upside. Around $70, the valuation is very good. 28 forward price to earnings, a 1 peg because they're expanding so well, and a 5% free cash flow yield. Moving on to TSM now. TSM up 4.19%, almost 420. Now, moving on in, daily uptrend has now been set by TSM. So this chart is even a bit clearer than other companies out there, right? But on the weekly, not quite just yet establishing that weekly uptrend, right? We know that who's in control right here. It is the weekly bears. I'll just move this chart so it makes more sense. Weekly bears, we're in control. Now we're looking for the higher lows into support. That was 147 to 138 after earnings. Higher lows. Can we get the higher highs? Well, the bulls need to just break a little bit more above, If we unwind and just undo this, unfortunately, you're just going into a bit more weekly consolidation. You have a lot of space above the lows still, right? Any move lower, I'll be still looking to write some short puts in or around the sub 140 to 130 zone, which is super attractive. It's the highs of 2021. And the valuation of TSM we've been very vocal on is extremely attractive as well at only a forward 16.7 price to earnings and a 1 peg with a decent free cash flow yield and outstanding net margin. So that's everything I had for you guys in today's video. I'm going to try to make them a bit quicker come the end of the week, right? Tomorrow is a very decent day for earnings as well. Coming out, Merck, Pepsi, NASDAQ, Union Pacific early in the morning. Then in the Thursday session after hours, we have Intel, Alphabet, Celestica, T-Mobile, a couple other ones too. And then Friday, SLB, AbbVie is going to be a big one for healthcare. Colgate, Palmolive, some defensive ones. Phillips 66 for some oil ones, and then more oil companies next week. So a lot of big names still. And then next week, of course, is the big week for big tech. So should be a fun rest of the week. Tomorrow, we'll probably do a couple of these earnings. We're going to do Alphabet for sure, then probably Pepsi, and then I'll choose whichever other one I find notable to our analysis right there. So that's everything I had for you guys today. Hopefully you enjoyed it. If you did, consider dropping a like. I would really appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. We'd love to have you back. We do these every Monday to Friday after the close. And lastly, if you have any questions, guys, always feel free. I will be answering a ton of questions in the comment section tonight. So anything you want, macro discussion, stocks, options, strategy, anything you want, always feel free to leave it down below. I love reading your guys' questions and answering them with very full answers. And lastly, if you wanted to have access to all of my trades in real time and also chat and have fun with over 150 different community members that all trade the same strategies that I always show on the channel, whether that be the wheel strategy, various credit strategies, debit strategies like call debit spreads, leap call contracts when the time is right and I find opportunities, and also long-term portfolios. Very fun community, engaging community every day. If you want to have access to that community and all of my trades, whether it be the wheel trades, the shares and calls, the long-dated strategies, the long-term investments, and everything in between, guys, the link is always down below. We've had a very good week of trading in the markets again, to where we're just farming the hell out of premiums in this market, having a very good time in doing so. Well, you get access to all those trades. And additionally, I do private morning live streams every morning, Monday through Friday, where we trade live for about 2 to 3 hours in the mornings. And I also take all your questions on your stocks, your options, your long-term portfolios, and everything in between. If you can't be there, they're always recorded. So feel free to watch them after. You can also ask me your questions in all of our chat rooms all throughout the day. And I'm always very fast to answer all those questions. Also have private videos in which I share advanced strategies that I don't necessarily post on YouTube. Credit strategies, debit strategies, leap strategies, how to grow accounts, whether it's a small account, a medium account, a large account, how much of a percentage of those accounts should be in the respective strategies to get the best growth for your risk tolerance profile, and many other videos that members have been finding very good value in as well. You also get access to all my charts, all the technical analysis, the support, the resistance, and every time I do any annotations on all my charts for over 100+ different companies from earnings or whenever I analyze them, you get to just copy paste everything. It's very fast, 2 clicks of a button. You get access to all my watch lists as well, the options watch list and everything in between. It's just another added bonus for you guys. If any of that interests you, the link is always down below in the video description. That's it for me, guys. Thank you so much for watching. Hopefully you had fun, and I'll see you back tomorrow where I recap the Thursday session. So take care. That's it for me. Peace.